Good morning, everyone, and welcome to today's Trading the European Open Live here at the Live Trade Room. Now, today is Tuesday, the 16th of October. Apologies, let me see if I can just slightly amend that. So you're very welcome to this session. What we would like to do is just to briefly explain what you can expect. So we're professional traders trading the markets with live capital every day. So every decision you make, every decision we make in these markets are very real decisions which have consequences, and of course from a risk perspective, but also potential upside as well. So what we do is we look to identify high probability opportunities for the session ahead, and we have a methodology that we can execute trades in these markets with a high degree of consistency in our approach and manage those trades with discipline. And what that will allow us to do is to grow capital over sort of medium and longer term with one aim, and that's to book in profit on a consistent basis. So in terms of our methodology, we're technical traders, and what we look to do is to cut our losers short. If a losing trade proves itself to be a poor trade in the end, then we're looking to cut that trade as quickly as we can, and we'll look to let our winners run and see if we can capitalize on some big moves. Okay, so without further ado, then, if we could draw your attention to our risk warning, if I can just bring it up on the screen here. So please do take a brief moment to familiarize yourself with the risk warning currently up on the screen. And before we start trading any market, it's very important for us as traders that we have an understanding of potential market moving news events that could either impact the trades we're in or effectively the trades we're about to take. So with that in mind, let's get up our Forex Factory. So that's our news-based website, and want to draw your attention. So Tuesday the 16th of October currently up on screen, and what you can see is we're looking for some major impact news events. So we're talking about the British pound here, average earnings index, and as you scroll through, there's not an awful lot else to deal with. Now we do have these discussions in Europe regarding, amongst other things, Brexit, but all the European premiers are meeting for discussions, and Theresa May and Merkel will be speaking about unfolding events with regards to Brexit negotiations, I'm sure. And what we'll see, and the reason why this is of importance, is because we'll be experiencing politicians going to the media, making certain statements, and as a result that can impact these markets accordingly. Okay, so we can come back and we can have a look at the 930 average earnings index. It's a quarterly figure, something that the Bank of England will be watching very, very closely. And in addition to that, we do have an unemployment rate number as well. It's very low. We're talking about 4% here, and as you can see from the chart, it's kind of the lowest that it has been certainly since 2012. So we're down at these 4% levels. So again, like any kind of news event with figures being released, we're looking for strong deviations. Obviously, a positive number for these two would contribute to support for the British pound, and a negative number we're very likely to see the pound selling off as a result. Okay, so that is so we don't really have an awful lot else to deal with for the remainder of the day. We have a few central bankers speaking at various different events, so that always has the potential to be a little bit to create a little bit of volatility in these markets, and something for you to be mindful of. Not that we're expecting much of an impact with regards to these events, but nonetheless important to be aware of. Okay, I just want to show you or share with you the event tomorrow, so I'm sure we'll start to hear about it quite a lot. and it's the EU Economic Summit, so do be mindful of that. I think there's a lot of preliminary talks tomorrow, and the actual summit itself is on Thursday, and it's all day long. So they're due to meet about a number of global economic issues, including Brexit and the economy in Brussels and the ECB and interest rates and bond buying and all of these types of things. So very likely to be a really significant event. Okay, so that's just a little snapshot of the news. So let's get straight into these charts then. And we'll start, as we always do, with the euro dollar. It's interesting to just keep an eye on the ATR, which is a volatility indicator. So you can see that there's very little range, or the range in these markets are really kind of reducing down quite a lot. Previously, sort of just back in June time, you're talking about 100 pips in a range, and now we're down to 69. So obviously that's a 31% decrease in the range or the volatility from high to low in these markets. Obviously that can be a little bit of a concern. So we obviously want to see momentum, we want to see significant direction, and certainly this is pointing in the wrong direction really. So as a result, we don't really have much to work with. We've got this little range between the 1600 and the 1536. So we're talking about a 70 pip, roughly a 70 pip range in here, and we're smack bang in the middle of that. So slight bearish aspect to it, and what we can see as we slide through some of the remaining markets is that the US dollar seems to be strengthening just a little bit. So we had the pound strengthen, we still didn't break above the daily high, and we've just rolled over to the downside. So if we get to see continuation in the euro dollar to the downside, and we get a rollover in the pound dollar, and we start seeing some continued strength, if we start breaking above yesterday's daily high in the dollar yen, and a similar situation for the dollar Swiss, and again with the dollar CAD, if we start seeing some dollar strength come in across the board, then it might give us some really good opportunities. Again, like an opportunity to sell the Aussie dollar, we wouldn't be too far away from a bit of a rollover to the downside, so that could be really worth looking at. And the New Zealand, we had some news out last night. In fact, I might just take you back to that news event if I can. And we'll just go back to yesterday. So, sorry, it's taking me back a whole week now. So, so we had a CPI figure, and it was very much more positive than anticipated. It was expected to be a plus 0.7, and we got a plus 0.9. So a positive inflation figure for the New Zealand dollar, and as a result of that, we saw a nice, strong, explosive move over the course of the session. Nice little gap to the upside, and then we've seen this very, very slow roll over to the downside, looking to close that gap by the looks of it. But on a daily time frame, we're getting a bit of a pullback off this high. So the reason why we didn't want to get into it yesterday was because of the news event, and also the fact that we're likely to see a lot of resistance come into this market around these highs. So it just didn't give us necessarily the risk reward that we would ordinarily look for, certainly when we're trading the daily time frames. Interesting bit of price action really when we see prices gap to the upside and then start to sell off like this. It's always the next price action that's really important with price events like this, and what we're seeing is a bit of a rollover, a bit more of a close of that gap. I don't think we quite closed it yesterday, looking like we could be on the next leg to the downside, and there is a little bit more room to the downside from this level. So the problem we have with the euro dollar, with the euro pound, should I say, is the basic fact that we're going into this EU summit, and yesterday's news event from Theresa May, which was kind of, we're going to do everything we can to secure the best deal for the UK, blah blah blah. Not an awful lot else has been agreed. We know that talks were somewhat stifled there over the weekend, so it is there is tough decisions that need to be made. The Irish border issue is a complex and really important issue in this negotiation. So we'll see how this price sort of unfolds. From here, you could expect these prices to continue just squeezing further lower to the downside. So we are very mindful of the volatility that we could see in this market. So this is a previous high, and we've gapped to the upside, and now we've rolled back over to the downside. So we'll see how price behaves around this 87, 89 level. If we get structural failures to the upside, we get these prices ticking lower. Could give us a good opportunity for some continued pound strength against the euro. Now, we need to see a structural failure below this level, so we're not looking to sell it at this price or anything like that. We want to see a structural failure where we kind of break below this with some degree of purpose. Worth looking at, just purely from the price action on a daily time frame. The pound yen, again, it's the price action that we see off the back of this gap to the downside, followed by a little bit of strength. So it's just a bit of an inverted picture from the pound, from the euro pound. So we've had some strange price action to contend with yesterday, when we're talking about the British pound, should I say. And we're getting some continuation to the upside today, but as you can see, we're pulling back into strong levels of resistance. So perhaps not the best high probability opportunity for us today. The euro yen, if we start to see some strength come into the euro and the yen to continue to sell off, and we'll have a look at the equities in a minute, could give us a little bit of an opportunity. The level I'd like to sort of have a look at is virtually at these highs here, the 129.82. We do want to see if we get a break above that, but what we might do is look at the yen as an entity and see whether it's buying or selling, and then that might present some options for us as far as that's concerned. The gold market, you can see the unwinding of this really long period of consolidation in here for quite some time. No surprise really to have a basic understanding that with the global turmoil that we're kind of currently seeing, sanctions with Iran, issues with Saudi Arabia, Brexit negotiations, global trade talks with China, the potential for more tariffs. So lots of global events, the whole protectionism of the US, their policies that they're currently pursuing. So there's a whole host of geopolitical events in Europe, with Italy, and the fiscal position of the Italian economy is not in a good way, and the impact that has, not just politically, but obviously from a risk perspective to the Eurozone, and the impact that has on Greek banks, and all of those types of things all starts to come into the fold. So what we're seeing is a little bit of strength. Yesterday we were able to get into the gold market, so we did find a good trade yesterday. We need to see a little bit more than what we've seen so far, so we don't know whether this market could roll over from these lows or squeeze above these highs. But what I'll do is I'll put a level in there, and what I'm going to do is suggest probably just watching this market, maybe just even on a daily time frame perspective. So we'll come back to that. Another market that we could be certainly looking to retest these lows down here would be the US oil market. So I would like to have a look at this. As you can see, we've got a bit of a structural failure to the downside. We're currently below the ascending level, and the next major level is the 70.50, and if we get a break below that, then we could be heading and certainly squeezing much lower over the shorter term. So I'd like to have a look at the oil market as well. UK oil was in the same boat. This market yesterday, we've gapped to the upside and we've reversed quite considerably. A bit of buying came in towards the latter part of the trading session, but we're seeing continuation to the downside now as we speak. So we're likely to see these prices just squeeze to the lower, but I'll tell you what we'll do, we'll probably just focus on the UK oil market. Moving on to the S&P, what you can see over the last 4 trading days is a selling, some buying, some selling, and some buying. So that's a pattern that may sort of reproduce itself until we get some proper clarity that we're actually moving higher or moving lower. So a little bit of ongoing indecision, the same situation. And what I would like to draw your attention to from a technical perspective, if I can just get our pen up, is the fact that we've created a high and a low 4 trading days ago, and we're nicely contained within each of these. It's effectively a bear flag, is what I'm effectively drawing on screen, and I'll do my best to just try and identify that for you. So this is classically a bear flag, and what we should be looking for is really strong breakouts of momentum to the downside. Now there's 2 opportunities. The first opportunity could be kind of a close below these levels in here, the 25,178 approximately, but the higher probability without a shadow of a doubt is the 24,900. So if we don't capitalize on this this bear flag movement, then we can certainly look for the breakout beneath these lows. And if we're seeing that across the equity space, we're very much set up for a really kind of strong move lower. So although maybe we're struggling to get into these right now with any real clarity, that could very much change, certainly if these prices started to tick lower. There is also an expectation, depending who you're speaking to, that these prices now represent actually a decent opportunity to start buying this market, that all the big money is still in this move. Nothing really has changed. So what we would want to do is not really have an opinion in terms of what we think is going to happen, but what we would like to do as far as price action is concerned, and really have a plan for whether we push higher, whether we push lower. And that's the beauty of trading contracts for difference and derivatives. It gives you that opportunity and that flexibility to not just buy a market, but also look to sell it if you get those opportunities. And this is a really good example of the actual fact that a market sells off a lot quicker than it kind of grows to the upside. Now, you'll always find deviations to that statement, but in general, the fear and the anxiety can kick in, and these markets can move a lot lower, a lot quicker. So that is the S&P 500. Do feel free, guys, to post any comments or questions into the chat box for us. If there's anything that you need some support with, do post any questions you have there. And also any trade ideas. Perhaps there is other markets that you are looking at. Do let us know what they are, and we can have a look at them and see if we can assist you with it. So the equity space is kind of in this bit of a range, and one will certainly give us a little bit more information than the other. Now we want to see a little bit of coherence across the equity space if we possibly can, and we're not really getting that there's a reluctancy for this market to squeeze lower off the back of these, and we're getting some buying coming into the US space and also the Euro stocks. So this might now be reacting to slightly stronger pound, where we might get continued movement to the downside as far as the FTSE is concerned, if the pound starts to strengthen and starts to rally to the upside. So the equity space, we can just look from afar. What I'm going to do is just monitor this high in here just to see how it's been performing. So what we shall do, and we'll continue to have a look at this market just to see what opportunity it gives us. So we can have a look at the S&P 500 on the bottom right hand corner of your screen. US oil we can have a look at on the top right hand corner of your screen. So this is our trade plan for the session, and we'll go into each of these in a second so you can see what the potential trade is. US oil. So the gold market, we'll have a look at the bottom left hand corner of the screen. So we're getting a bit of strength starting to creep in. So quite a strong move just very recently in the gold market. We still have the 1233, which is the daily high to negotiate. So and the euro pound, top left. So right, so let me start with the euro pound, top left. We're seeing this market move to the downside, so what we would like to see is the market move lower and then a bit of a pullback if we possibly can to this level, and a turnaround trade to see if we can take it lower. So we don't necessarily want to capture this particular breakout just yet. I suppose the major reason being is that this is a strong kind of level of resistance in here, and we could very easily just see a bit of a retracement inside that level. So what we would like to see is some continued volatility to the downside, followed by a bit of a reversal, and see if we can get in onto the next pullback. So I suppose the other thing there's a bit of a downward moving range. So waiting for this pullback could be the better trade to take, depending if it gives us that really strong opportunity to squeeze lower. So that's the euro pound. The pound yen is ticking to the upside. So too is the pound dollar. So the pound is definitely proving to be stronger than the US dollar just for the time being. So it looks like the pound has reacted quite favorably. We're only just recently seeing a bit of a break to the upside, so we've closed. So now this is a kind of a strong structural failure back to the upside. Strong structural failure to the downside, gapped lower, reversed, and now we're structural failures back to the upside. So we'll have a look at the pound dollar and the euro pound as well, and what we can do is we can kind of rotate between these markets and see. So of course we'd be looking for a pullback and a buy trade around the 31.82, and we're looking for the same breakout to the downside this time, because we're looking to to buy the pound against the eurozone, or the euro should I say. So we're wanting to see this market push lower. So we want to see the breakout and then see the pullback. And vice versa in the pound. Now the other thing that we do have is it might be a fairly short-lived move, just because of the CPI data just due out in exactly 1 hour's time. So we come back to that market shortly. Okay, so the gold market has just pulled back below that 12.28, which is this high just sitting over here. So we've got a very clearly defined range actually just within this price action here. So So we've got this narrowing of price action, and if we get a breakout, see we're currently firmly between these ranges in here. So whether it's horizontal lines or whether it's this sort of narrowing, kind of a bit of a bear flag as well. So we've had the strong move lower, followed by a bit of a flag. Bit of price action. Yes, we did try to break above that, but we rejected it pretty quickly. And we're firmly in the middle of this little zone in here. So what we can do is the first structural failure was just sitting in here. That there's the initial trade to the downside. So what could be worth looking at is if we've got a little bit of a pullback to that level, we might be able to capitalize on this market to the downside. So we've got a couple of options. Just the market to be monitored right now. It's not really giving us any price action that we can work with just yet. And as we look here, we can see there's a potential for a bit of continuation to the upside. May very well be short-lived, but certainly, and we're kind of at that level as we speak, really. So just kind of monitoring these highs in here. Actually, so now we've just formally broken to the upside. So now this is a structural failure back to the upside. You can see how choppy this is. So we do need to trade that and bear that in mind when we do trade. But there's a bit of a support of price coming in technically from this sort of price action here. So this is now an ascending triangle, and you get these little price points pushing prices higher. So we're getting this little move now. So this might give us the first opportunity for the session. So we need a structural failure in here. Again, for the oil markets, we need something constructive for the euro. So kind of a pullback if we can. Let's go into the smaller time frames for the S&P. So when we go into these smaller time frames, we get slightly different perspective on it. So maybe a close above the 27.59 with a stop loss below this level here, 27.50. We were looking at that 27.50 level a lot yesterday as well. So this is potentially firmly the breakout trade, so we can get into this and place a stop loss back here. Again, it's important to make sure that you amend. If you use one-click trading, to the default settings start to kick in with these markets quite a lot. And we can trade one index with the S&P. So there's slightly different volume sizes or trade sizes connected with each of these markets, but the equities, the minimum trade size would be one index. But the S&P is definitely, with the size of stop losses that we use, it's one of the more affordable equities depending on how much capital you have available, so do bear that in mind. So we can see that the gold market is just attempting to kind of break higher. So what we'd like to see from the euro pound is a bit of a kind of a pullback if we possibly can, and then a break beneath this low, and then that might give us a really nice concise stop loss in there and an opportunity to take this market lower. But let's see how price just reacts currently. So there's your kind of descending triangle. So really you are looking for a breakout to the downside. What's confusing factors is the fact that we have this level of resistance which becomes support around this sort of same level over here. So maybe a bounce back to this level here if we get some consolidation is the potential move to the downside. Okay, so now we're getting that little breakout just to the upside. Currently experiencing a little pullback. So you want to see that structural break to the upside of 31.82, which we've now seen, and now we're just getting that little pullback. So there is more scope to the upside in this pound dollar. We are seeing some weakness across the dollar as well, not so much against the yen. So clearly a potential pullback in the pound yen. We've already retraced these highs in here. So if this market could come back to the 147.40 sort of 50 level, somewhere around there, then it could give us a good opportunity to push higher. So just to, the pound is strengthening against the dollar. The dollar is strong against the yen. So from a strength and weakness perspective, the pound yen gives us the better bang for our buck from a trading perspective. So what that's telling us is that the pound is the strongest. The US dollar is kind of in the middle, and the yen is the weakest. So that's what we're seeing. So what we're suggesting is, let's look at strength versus weakness. We've already got a little bit of a move effectively. We got the confirmed break above that level. We got a strong pullback to the 147.41, and now we're extending to the upside. Would a nice little movement continue further to the upside, really, if we get it. So that's the trade. And sometimes you need a bit of price action to be able to have more confidence in that. The only problem we have with this price action up here is that we're in the 3190s, with the 3200 potentially being a strong level of resistance. So we're very likely to get some sellers starting to creep in. So we're not really seeing a structural failure being created for us in the oil markets just yet. Just this mildly grinding lower market. So we need to see a little bit more from this before we can get into it. The S&P 500, we do have the 2759. So we're currently seeing a pullback on this. So we could actually get into a breakout trade above the 2759 and use this little low in here as a really small, concise pullback, hopefully. So we know what we're looking to do in this market, which is effectively for this market to just come back to roughly this area in here, where we'll look to take that trade to the upside. So that's the pound yen. The euro pound, perhaps not giving us the best of opportunities. We do like to sell it below the 87, 89. We've only had like one close below that level, and then we've had a bit of buying pressure creeping in. We're just having oil grinding lower, not really giving us much of an opportunity really in that market just yet. It could be a case of kind of waiting for this market to effectively pull back. So there's a potential trade. First of all, in the euro pound, some kind of constructive pullback where we could have a higher degree of confidence that's going to continue lower. With the pound yen, we do need to be a little bit patient and wait for the pullback and extend it to the upside. The oil market, we do like this market lower. We just don't really have any price action for us to work with to the downside. And that we can look for a breakout trade in the S&P. So those are probably our higher probability trades out there at the moment. So do keep a visual record of that information. We're needing to see a bit of a, I suppose ideally a strong pullback. a strong pullback in that level, which would give us probably support and resistance to maybe look to sell from a slightly higher price. At the moment, like this price action here is just, it's just grinding in that direction, so it's poor quality price action for us, even though we do want to get into it to the downside, because then we have issues with where do we place our stop loss, and we don't want it to be too exposed. So the pullback trade could give us a nice clearly defined high just sitting in there at whatever level that is, and we can then look to take it lower. So all of these forward trades are reluctantly potentially moving in a direction in which we want to trade them. We just need to try and get that timing right. Guys, I'm very conscious of the time. We're going to have to switch across to the live trade room. We have traders there waiting for us. So please do read our description below. If there's if you are interested in joining us, please feel free to do so. We're still currently offering a 14-day free trial. I know it's ending soon, but do take us up on that opportunity. You can join us completely free of charge, no obligation of any kind. You can access all of our live trade rooms every day, and hopefully just really benefit from a solid education and learning how to trade. And then if you just want to join us and you want to attend our live trade rooms, we also have our capital growth webinar every evening at 9 o'clock, and it's just $9.99 per calendar month, so hopefully you'll find it a very affordable sort of solution for you to learn how to trade these markets with a high degree of consistency in your approach, discipline with regards to your capital, and look to let those winners run when you get those opportunities. So there's no doubt about it, trading conditions have been a little bit on the tougher side, certainly the last few weeks, but hopefully we'll have some and what that allows us to do is to really fine-tune our approach to risk management. So it does come with its skill development built in. So all markets are kind of useful from a learning curve. It is important for all traders to be able to identify different market conditions and look to trade them with a high degree of I suppose, discipline, again, with regards to your capital. So making sure you don't take those big hits during difficult market conditions is a really important skill, something that most traders really struggle with. So we will absolutely assist you with all of this over at the live trade room. So do click on the link, you'll get access straight away. And for everyone else, thank you very much for joining us. Do feel free to subscribe to our channel if you can. Do give us a thumbs up if you can as well. And click the notification button, you'll be notified when we go live. And in addition, you can connect with us through our Facebook, Instagram, Twitter and LinkedIn. All the details are there up on screen. So thank you very much for joining us, guys. Do take care. We've got a few trades in the pipeline that hopefully we'll be able to get into shortly. And we're switching over to the live trade room now. So from everyone here, all the best. Take care. Bye for now.